Okay, so the one question that I had the most over the past couple of weeks was, when will the banks be allowed to increase their dividend? So basically, what's happening right now is the COVID virus is, of course, wreaking havoc still, apparently on the political scale too. And from there, what we have is basically the government, or at least a watchdog agency, that has basically put a restriction on banks from raising the dividend. Well, from the American side, it's the Fed. From the Canadian side, it's like a watchdog organization. So basically, let's see who will raise their dividends first and which banks may do the best. So, as of June 30th of this year, which is coming up very, very soon, 2 days after my birthday, the Fed will lift restrictions on dividends, yes, and buybacks, yes, for most banks after June 30th. This is huge news, amazing news. For anyone looking to get dividends and a raise, this is massive good news. And generally speaking, when it comes to any company, when they raise dividends, guess what happens to the stock price? It goes higher, which is fantastic news. So what does that tell us? There are a few different plays that we could run. We could invest in companies like JP Morgan Chase. I think that they have a fantastic track record of raising dividends. They are currently only sitting at 2.36%. They're up $1.30 today at the time of recording this video. Anyways, they're trading at 153.80 and their stock ticker is JPM. And from there, their average volume is 14 million shares traded every single day, which is huge. So it's easy to get in and out of. And when it comes to the American banks, they have a very good PE ratio, in my own opinion. It seems to be on the lower end if you look across the scale. And of course, I always look to invest in banks if they are under 13. I do not want anything that is over 13 in most cases. So at this point, from the surface, looks like a very good investment right now. If we look at the 5-year chart, it's been pretty steady climb all the way up to the top. Of course, we had COVID, and now, of course, it is starting to trickle back in. It hit the top of the scale before pulling back, which then really tells us that if this was actually a straight line, that it's having troubles trying to reach past this range. However, at the same time, if we see the lower range, it could pull back just a bit more. It's hard to really say. However, at the same time, this looks very promising on a 5-year chart kind of scale. If we look at their dividends that they have paid since 2016, they have raised them small increments until, of course, 2018, where they raised from 56 cents to 80 cents, and then just recently in 2019, 80 to 90 cents. So this is showing us that they are willing to increase their dividends, and they seem to be a pretty solid company at this point in time. If you track back to even 2013, they were at 38 cents a share, so of course they do look like a very solid company. They've also beat quarterly estimates the last 4 quarters, and of course 2020 was not a hugely massively bad year considering of COVID, and I would assume that 2021, of course, with everything recovering, their earnings should continue to, of course, go with this trend that we've seen here. In Canada, a good way to play this is, of course, ZWK, one of my favorite ETFs, currently under 7% dividend, which is crazy because this was like 10% a few months ago. Hopefully you were lucky enough to grab it back then like I was. This one does have a pretty high MER of 0.71%, and the average volume isn't terrible either. It trades at $30 per share right now, up 1% today. It doesn't have a 5-year chart because it was only made, of course, February of 2019, and of course COVID really wreaked havoc on a lot of the markets, but it did seem to be having some growth before COVID. It's obviously had some really great growth since COVID, and it's starting to pull back and trade within a range. So, of course, we're going to look into that and see, of course, if that continues or will it break out with the new potential dividends that may be coming out. Now, this one does have a higher dividend than what most banks pay, mainly because it is a covered call strategy where you're going to be basically selling calls against the shares that you have of the banks, or at least they're doing that for you. And that will allow you to get a bigger dividend. The nice thing I also really like with this is they do raise the dividend, and it's a monthly dividend that seems to be the same price every single month. And it's really nice because we've seen it back in 2019 where they raised it from 15.5 to 16 cents and now to 18 cents. This is what I really, really, really like to see in an ETF. But what about Canadians? What about Canadian banks? Will they raise dividends? Well, originally we thought like it's going to be around the same as the United States, but it doesn't seem like that right now, mainly because a lot of Canada is still under lockdown because our governments are too afraid to open. So, because of that, OSFI signals no plans to loosen bank buybacks, dividend restrictions in the near term. So that was released April 2021. So of course this could change. Anything could change. It's been a few months, but at the same time, this seems like probably whenever the lockdowns either disappear or whatever it may be. Canada's banking watchdog doesn't seem too keen on lifting restrictions on share buybacks and dividend hikes at the big banks anytime soon. In a speech on Tuesday, Office of the Superintendent of Financial Institutions, OSFI, Assistant Superintendent Ben Gulley said the banking regulator, I wish I could talk today, regulator was still monitoring the impact of the third wave of the pandemic and plans to leave the measures in place until the concerns subside. So to me, basically what this means is probably at the end of the year or maybe early next year, they will be allowed to raise dividends, which absolutely sucks because of course these banks are going to be carrying more and more money in their accounts to be paid because they're making a killing right now. And right at the end, it says, the appetite to deploy excess cash on the balance sheet has been on full display among the nation's top banking executives. Speaking at the RBC Capital Markets Canadian Bank CEO conference in January, Scotiabank Chief Executive Officer Brian Porter said he was ready to swing into action the moment OSFI loosens the restrictions. When the regulator gives us the green flag to do that, the next day we'll be out buying back stock, Porter said. We think our stock is inexpensive on an historical or current valuation metric. This is one of the reasons why I have been so hyped on Scotiabank stock right now. They are looking at buying back stock, and then there was another article after this one a few weeks later saying that they have record amounts of cash on hand to distribute. So whether that be from cash buybacks or from dividend raises, this is going to be huge for Canada. So one of my favorite banks is CIBC. They have a huge history on raising dividends. Currently they pay 4%, which is pretty good. They've pulled back for a little bit from the top that they were at, but not by a ton. Their top 52-week high was $148. Now they're at $144. So not a huge pullback, but it is still substantial in my mind. At 1.6 million shares traded per day, that seems to be pretty solid, and the PE ratio again is in the 12 range. They have also been trading within a range like we see with most Canadian banks, and they've finally broken out past that range after almost 5 years. So this does seem like a play that could get some momentum going. And I do like to trade momentum, but I also like to trade dividends. And as we can see, they do like to raise dividends. They sometimes do it even every 2 quarters, which is huge when you're really talking about it or thinking about it, because most companies will only raise dividends once a year. They have also been killing earnings. Of course, 2020 was still tough, but they did make money. They made a lot. And then, of course, they are killing it when it comes to their quarterly dividends. I mean, quarterly earnings, not dividends. I got dividends on the mind. And then, of course, Bank of Nova Scotia, BNS. Again, highest dividend out of the big 6. One of the most expensive. I think it's pretty close to one of the most expensive, but at the same, when it comes to PE ratio, but again, highest dividend out of them all right now. And if they're looking at doing share buybacks and they're looking at raising dividends, this is going to be a very big paying stock very soon. 3.8 million shares traded per day. Their 5-year chart again, shows like they sort of traded within a range, but at the same time, it went up and just basically stalled out and came back down. It's now starting to come back to its all-time high. However, it's just not there yet. And if it hits that point, I would be really interested to see if it pulls back or will it accelerate to the upside. We can see they also do like to raise dividends, what seems to be every couple of quarters, obviously until the recent stuff that's been happening. Now, they have had 3 good quarters. The third quarter of the last year did seem to be a little bit painful, and their financials for 2020 were not the greatest considered versus the other banks, but at the same time, if they can continue this uptrend in 2021, then we'll be looking at a very big earning bank very soon. And then my golden child, I'll say, is BMO. It's like the bank that I'm up the most on, and the yield is 3.3%, and the volume is 2.4 million shares traded per day. One of the most expensive stocks in Canada when it comes to Canadian Big Six banks at 14.08. So not necessarily the cheapest, but you are getting a pretty good dividend, and of course it's up huge this year. As we can see, it's just absolutely, momentum-wise, just blowing things out of the water. Like, look at that rocket ship right there. But anyways, it did trade within a range for a very long time. COVID happened and it's finally out of that funk of just trading sideways. And yeah, that looks very, 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 very good and happy. This is another stock that does like to go every 2 quarters and raise a dividend as well up until recently. So, of course, this does look very promising for future dividend raises. It's also had 4 very good quarters and also has had a very good history until 2020. But when it comes to earnings, I like the fact that they have a good earnings to revenue percentage versus other banks. I hope that this video has helped you understand the banks just a bit more. If it has, hit that like button, subscribe. Hopefully they can raise dividends soon, and I'll see you guys again in my next video.